Good afternoon. We're getting started. Make yourself comfortable as people jump in here, and we're going to get started right away. While we wait for people to come in, I'm just going to go back over here to my charts and just kind of look and see. We actually just put a short on, which we'll see if this is going to stick or not. I need to see some selling quickly, or I'm going to get stopped here. There is JP. Walk through this trade here real quick. So we're post non-farm payrolls today. Have not done anything yet today. What I'm intrigued by. Here's what I'm intrigued by. I'm intrigued that we have lower IB extension in the Dow, which is inside of yesterday's range. We've had some selling spikes kind of coming through, and this looks like short covering behavior. So I'm kind of front running that, believing that potentially they are going to puke them. And this is about the time of day that if they were going to puke them, they would puke them. And specifically what I'm leaning on was there was an order flow spike here. So we never go with the first one. We look for the pullback. So there was a nice pullback into this area, and then they made a lower low. So this was the area that I got short. My stop is at the top right here, but my target, number one, is all the way back down here. So from a risk to reward standpoint, I'm short 95.75, so like right here. I'm risking this much to make this much, but looks like they're gonna run me here, which is fine. We define the trade and we'll deal with said consequences. What's the high of that 30-minute? 704.
Let's say this is ridiculous movement today, but it's ridiculous movement today.
Yeah, it just is. It is what it is.
Yeah.
It is what it is.
Look at our range today. It's just terrible.
Yeah.
Our range is what, 58 to 76.07.
Yeah.
Wow, that's terrible.
It's definitely. I've been looking at crude today. Has not agreed with any of the setups that we're looking for. So it's just been a sidelines day there. Would potentially be interested in a short if we get to the 62.83 area, but we're just not there yet. Only thing that we did do today was we took a long in cattle that got up here to halfway back and got us to a break even on our entry, and then they came back to our break even. So it's just been one of those days. Happy non-farm payrolls. May the jobless rate be ever in your favor. It is what we are. You can see. So this couple anatomy aspects here. So this is the VWAPs, the volume weighted average price. This is the point of control, which is the most traded price today, and you can see we're just inside of that. Very much rotational trade, below average volume. We're about 20,000 contracts below where we should be at this time of the day, and about 1 p.m. Eastern. If you're going to see any kind of move come in, the last kind of ditch move likely to come in on a Friday is going to be around this time. Otherwise, everybody's going to kind of shut it down for the weekend. So we'll see. For this trade that I'm in to really work, I got to get below this area of volume right in here, and then I think they could go attack these lows and maybe start pushing. But we'll see. Stops are in.
Yeah, the one thing that you have to remember on days like this too is that it's choppy. So if you take a swing and you miss, it's just going to happen. You know. And you just have to recognize that and go, yeah, it's not a good trade day, so we got to get out of here.
Yeah, the behavior that I like more on a day like this, if it wasn't a Friday specifically. So we can see this initial push, which actually, so 73 ish is where the non-farm payrolls report was. We came back to test that early in the session, and that's where this initial push came from.
Mm-hmm.
So that's a great place to defend and kind of watch and mark. But then, you know, we've got what they, if you've been around profile, they call this a P formation. This is always confusing for traders because they don't know, does this mean, is this, sometimes that means short covering, sometimes that means an incomplete auction. When you're in a downward trending auction and you see a P formation, that's often a short covering deal, because what's happened is the auction has come down and then, you know, moves rapidly higher and then bounces, and then you see it fall back out of bed. When you're on an uptrending auction, have been moving higher and you see a P, that's typically an incomplete auction to the upside. And that would say that for this auction to be complete, we'd probably get up here around the 22 area. So if it wasn't a Friday, I'd probably look for a fade up here around 22 back towards this prominent area. The problem is that would come, you know, later this afternoon when there's not a lot of volume to pull it back, and that's also getting new highs at the end of the week. So not a good probability there. So what I'm looking for right now is the idea that they've trapped some people who try to go long and aren't getting any follow through, and that we might break down and they might press them into the close is the general idea. So we'll see. We're tracking this. Again, stops are in. We'll let the trade do as it does.
And Alex, we'll answer your question here in just a minute. That's a great question, by the way.
Let's see, what was that? Okay.
Should we get rolling so we can
let's
be mindful
get
of time?
rolling. Yep. So that's a quick update on where we are. As always, want to be mindful of risk. That's actually what we're going to be talking about a lot today, is how do we mitigate risk. A little bit on me. Josh, I'm the founder. Also with me is JP. We are kind of the core of our trade profile team, and we are a skill development firm. So our idea is to, if you're not consistent in the market, you don't have if you wake up each day and you're like, I don't know what I'm looking for. I don't know what I'm specifically trying to do in the market. I don't have a plan. We're a great team to work with to get you towards trading skill and consistency. And we do that through our profile trading development pathway, where we focus on 3 objective areas. And those are, and these are the areas where if you have mastery around these, we think every competent trader that I've ever encountered, have seen develop and done well, has seen mastery in these 3 areas. One, they can see behaviors in the auction and they know how to read them and know which one you are, so kind of know where to ground yourself. They define every trade, so they know the 4 questions to ask and answer before putting on a trade. And then they've walked through 4 stages of auction competency, which is linked to the 4 stages of development of going from an unconscious incompetence to an unconscious competence. And today, you know what? This is the wrong slide deck.
Whoops.
That was last week's. Here, let me load up this week's. Here we go. I had them. I knew I had them. I just didn't have it in here yet. We talked about patience last week. So if you want to look at the idea of patience, go back, check out last week's discussion. It's thinking. Here we go. This week, we're talking about the idea of this specific challenge. And every time we talk about development, we think in terms of challenges. And we say, okay, so you've entered an area of interest according to your plan. So this is, again, assuming you have a plan to begin with. There's a predetermined kind of idea that you're looking at. Well, once you do that, how do you define and minimize risk upon entry? Given that risk is, I mean, only 2 things that we really have any control in markets is how much we're willing to risk on a trade, and where are we seeking to be active. We can control those things. We can't control, does the market go up or go down? We can't control or predict which way it's going to go. That's kind of a first clue that somebody doesn't know what they're talking about when they're like, oh yeah, the market's going to go to this, or it's going to do. There are no guarantees in the markets aside from the 2 things of how much you risk and how you define the areas you're going to be interested in. So we use this idea of triggers. So and what is a trigger? It's a trading nomenclature, but it's a how do I, once I've identified an area of interest, how do I then define the trade in such a way that I can keep my risk as tight as possible? And there are just a few triggers that exist that we use. There aren't very many. We'll spend next week talking with our community about the specific triggers, but they are what we call go with triggers, fade triggers, and engulfing triggers. And so I want to look, since we talked, a couple of you joined us since we got in there, but one of these was a go with trigger that I was looking for here in the NASDAQ. So the trade that I'm looking at is I'm looking for the NASDAQ to move to 75.61 late today, which I know you're looking at that going, that's quite a ways away from here. But according to the behavior and what I see in the auction, how we're doing trying to get higher prices, we're struggling to do that. I'm looking for this opportunity, and what initially got me there was a higher time frame, lower low on this 30-minute with negative order flow, and then I was looking for a shorter time frame than the 30-minute to get in, and what I saw, which I'm pretty sure I'm going to get stopped out here. Close, we're real close. What I saw was a push. So this was that engulfing movement. When I looked at 5-minute, so this is this first impulsive move. So one of the things we talk about is you never go with the first move. You always look for kind of like the reload for the next move lower. And that was here. This was the initiating strong activity. Here is the pullback, and then a lower low with order flow. So that, what was missing there wasn't really any strong volume in that. But I got short as soon as we broke this low. So that's what we call a go with trigger. So it goes, pulls back, and then you go with it, and then you defend an area. So the area I'm defending is the high of this 5-minute period. You can see we got really close up there already. And if we trade back through that, so I'm basically saying that these sellers right here are other sellers that I joined with and I'm gonna lean on until they get taken out. If they get taken out, then the premise is out. It's already not encouraging that we've traded above this, where kind of the reload was. But this is how we keep the risk tight. And again, my target, it always starts with the opportunity. And part of the reason I'm this opportunity is because I've been seeing, if I look across the equities, I'm seeing them make new weekly highs, but not get further acceptance around that. And it's just really anemic. They're not really tripping over themselves to buy. This is exactly the type of scenario where we might find people getting trapped, kind of late to the game, and then they get squeezed to the short side. And so we've got a reference lower at 75.61. Which actually was an area I was interested to be long earlier this morning that we did not get. So now that becomes a potential target area. We've held an area, the 76.04, which was a decision level for me. We've held that all day. So I'm kind of leaning around that. That was part of my plan. So I'm looking to target back into this zone. So that's my target. So it's like, how can I keep my risk as tight as possible, especially in a market like this? So the NASDAQ's $20 per point. I'm basically risking about 5 points with the opportunity to make about 34. So from a reward to risk standpoint, the reward is much higher than the risk. And I'm willing to be wrong because I've defined the risk. So that's one type of trigger. Another one is what we call a fade trigger. And we actually looked at that today. That got us long in cattle. And how this works is here you have a downtrending market, and then I'm using the wrong tool. Downtrending market, it pulls back, can't make a new low, and then comes back through some area of where, last tried to sell, which is right in this area right here. I had a target back, well, at least intraday was back here, but really looking for like 123. We were looking for a swing trade here. That allowed me to get in, stop below the low of the day, and away we go. And you can see we had some pretty good favorable excursion on the trade intraday before they came back and took us out. But those are just a couple triggers. Another one that we use is an engulfing trigger. Now, there's an engulfing period right here to the sell side. If this had been the opposite direction, so since you are always trending lower, if this had been an engulfing this way, this could be an area, a period that you lean into, and then you have a stop below it. So those are the three triggers. We'll spend some more time looking at those with our community next week. And if you have any additional questions on those, happy to look at those. Or if you want to look at a specific product, we're happy to look at those as well. But we also can look at questions. How do you follow so many markets? Only trade ES and have four monitors with all kinds of charts. Are those all charts of ES? Yes. So if those are all charts of the ES, I'm assuming that those are all different time frames that you're looking at. Yeah, market profile volume. Okay, that makes sense. I mean, part of it just has to do with having a plan and knowing areas that you're interested in, using lots of alerts. So I personally look at 4 markets every day to express some type of intraday trade on that I prepare a specific plan. And I look at a whole bunch of other markets, but those only they have to be in a specific orientation to catch my interest. Otherwise, I don't look at them at all. So unless they're in that type of arrangement, I don't care. Even looking, I mean, this is kind of a dashboard of products that I'm looking at. I'm looking at some ags, looking at treasuries, some metals, some energy, a little bit of currency, and the equities is just kind of the world. So, at any given time, I'm probably only going to trade 1 or 2 of those a day, but I have an idea and plan that I'm looking to express. In fact, we've got a specific trade setup that we look for every day in every product that typically shows up in one of the 4 products that we look into express risk around, and you just don't know which one's going to be. So, but to affirm what you're doing, before you start looking at lots of products, it's one or two. Either you look for one anchor trade or approach that you have mastery over, that you can do over and over and over again, that you can extract money from the market as a net gain, or there's like one product, and then you have a number of different ways to look at that product, and you're trading in that specific product. Either one can be effective based on the specific trader. But the other part of it is just I don't have to spend as much time because I know what I'm specifically looking at, so I can kind of look at a market and then go away from it until an alert triggers and then come back to it from there.
And I'd also add that just simplifying, if you look at your charts, and everybody can do this, and if you can objectively ask yourself, do I use this when I'm looking at? And if not, just take it away right away. Don't think you have to have all the charts to do it, because if you're not specifically using that information, get rid of the chart or get rid of the indicator or whatever you're using on that, and that will reduce the clutter on your chart for sure.
Yeah, that's a great point, because I spend space here. I mean, I look at other time frame charts when I'm building my plan, but like once it gets to like the trading session, like I'm just looking at one chart, and typically on this one I'm hiding stuff that's irrelevant until the point at which it becomes worth dealing with. So just to keep myself from being distracted by lots of things that I don't need to be distracted by. I'm easily distracted. Um, Great. What other questions can we answer? I'm trying to think if we had any from the community that anybody wanted me to cover.
You guys are easy this week.
Yeah.
And this market has rolled to a
Grind.
grind. It's not even grinding. It's just dead.
Just dead.
Okay, so guys, this is a clue that you shouldn't be trading on a day like
Yep.
today, Josh. So
Hey, I defined the trade. Don't give me
I
that.
know you did, but I'm just saying. My, outline that kind of stuff. Outline. Like Josh said. When for charts, too many charts. Make sure you are either defining one trade on a specific a couple different markets, and you can just wait for that one specific trade that you own. Or if you're looking for multiple different opportunities on one instrument, then wait for it, but also know the criteria behind that too. Like on today, my criteria says that after 12 noon Eastern time, there's nothing getting traded in my book, period. And that's just the way it is. And then second of all, if we see what we're seeing right now, this kind of lethargic movement and volumes are terrible right now.
Mm-hmm.
You got to be out of there. Just wrap it up and come back another day. Because I always tell the channel that what we want to look for is the bag of money sitting in the corner. Now there was a couple, and Josh said this before. What's that bag of money look like? Well, that's your trade setup, and you're waiting for those specifics to happen.
Yep.
Or your criteria, and you're waiting for that to happen, and it will show up. It's just a matter of being patient on it. And today's one of those days that I don't care how much patience you have, unless Josh will, if this thing, and Josh is right on this trade here, I think they'll flush it. They could flush it later. If not, it's a defined risk for him, and so be it. And like I said at the beginning, on days like today, it's okay to take a swing at it. And if it doesn't work, it doesn't work. We know what, then it gives you a clue of what's happening today. But what you don't want to do is keep taking the swing and taking the swing and taking the swing and take 5 losses in a row. And then it's not, for one, not good going into a weekend.
Yep.
And 2, it's not good for your count last time.
That's right. That's right.
Okay.
That's absolutely right.
Market profile. Okay. Do you use RTH daily, weekly, monthly, high, or with overnight price action for reference? Plus both. Okay. So I'm going to tell you my personal way of doing it, and Josh will probably give you his. I look at daily, weeks, and highs on a regular trade hours. And I look at, well, first I don't look at monthlies, but once a week on Sundays. And I mark the weeklies, the highs, because I watch the weekly profile. That's one of my go-tos. But it's on a regular trading basis, regular trading hour basis. On the daily basis, I look at both the overnight high and low, because I want to see what inventory is doing overnight. And then second of all, I look obviously at the daily, because a lot more people look at daily than they do Globex going forward. And that's just a simple process of that. But I will use both of those as reference points in my trading. Josh?
Yep. Yeah, same.
Okay.
Same.
Thanks, Nicholas. Yes, I did. And they are closed. They are flattened and out. You must have been in here when I told you about my mistake. So good call, bud. I appreciate you being on top of me on that deal. So I guess that happened to my oldest the other day as well. And he panicked, and, we had a little chuckle about it afterwards. But yes, all orders are flattened. Everything, the book is cleared. I've checked it twice. I'm going to check it 3 times before I leave, and then that will be it for me. So,
All right, I'm flat. Done.
bummer.
Oh, I mean, it was worth a shot. It was
Yep,
worth a shot. And now I know it's time to get to the weekend.
that it is.
Let's see. Stopped.
So let's talk about going into next week real quick. Okay, so we have quite the run here going over the last few days here. We have, we have 1, 2, 3, 4, 5, what I would call pretty strong days. A couple of them being trend days. 1, 2, I guess you could call 3 being a trend day. 4 is definitely a trend day. So we have some pretty solid business going on here. We have all-time highs on the NASDAQ just above us. And I don't want to say, yeah, we're going to hit those, because I'm never one to say, that's, but there's a high likelihood that we're going to go up and test those highs. So going into next week, we have, we have a couple things going on next week. We have the FOMC minutes will be released, and a lot of eyes will be on that. That's Wednesday. But we also have Uncle Jerome I say Uncle Jerome, Jerome, the Fed chair, is speaking 3 days in a row next week, Wednesday, Thursday, and Friday, I believe it is. And that alone could push us higher. At the same time, we could see a lot of volatility in the marketplace. So again, it's important to just make sure you're following your plan. Make sure that if it gets too volatile, you need to step aside. Okay. Just because your plan says, hey, that's my trade. If it's swinging wildly back and forth, then that may not be your trade to take. That's not the bag of money sitting in the corner. Right. So next week could be interesting. I'm pretty excited for next week. Actually, I think we are going to see some volatility, and I'd love to see that. So, because this stuff we're seeing today is just pathetic.
It's pretty remarkable.
Well, hang on, I'm laughing because Nicholas says you don't want your wife to hammer. Well, that's true. Good point. Unfortunately, my wife is sick in bed right now with she got the flu. Late last night, it was terrible, but she will not be yelling at me this week. So I had a good week, so everything was good. Alex has, regarding group trade plan, it's 1 module a week. Is it possible to cover more modules, or is it a group thing?
Yeah, we do that in a one-on-one basis, Alex. So if somebody wants to accelerate it faster than one module a week, then we do that one-on-one, and that's kind of a special plan. It's intense, though. I think you'll find that even the group work that we do, it's a lot of stuff to look at. Just merging this profile, just look at kind of seeing it where we've come from. My hindsight of like where I really felt like I wish I had been nimble enough to think about this, and I just wasn't. I just was not nimble enough. When I mean nimble, I mean being kind of interested in an idea and not being able to see the changing circumstances around that. And that's this. Okay, so this was why we took off and have run to these new highs, and why it just keeps going is that there was an area that we had come into. You can see there's a really big prominent area, the 7144. We pushed below that. That was actually a gap open lower, and came back through that and have never looked back. And this is consistent behavior to watch for, is when you have an area of acceptance like this, when the auction tries to go below it. And this was kind of one of those where everybody was looking for kind of that next big leg down, and we didn't get it. that then the squeeze was on, and we've now squeezed for 500 points, which is just awesome. It's just awesome. But now, as you look at it and you can see, the merge profile, you're going higher. I mean, there's some key areas to watch to the downside. Really, since the Ides of March, 73.50 is the most traded price. Look how much we'd have to trade in one side to change that scenario. So we do have some references, like we got this 75.63 area. That's kind of that target area is looking for lower. And then now we're building kind of an area right around here that those are references to watch, and see if if the auction can't keep going up through them. And this could be even next week, is we could try pushing higher and then come back through this area and start cascading through some of these. But there's lots of just really poor impulsive structure, which you can get frustrated by it. And in the past, I used to get frustrated by that kind of stuff and just say, I can't believe it. I can't believe it. And now I'm more just like, it is, just we just look at it and say it is. And the answer to the question of when will it stop going up is when there's enough sellers to stop it from going up. And there's just not enough sellers yet.
And something else is, this is a great point, Josh, and it actually leads into a very, very smart, very successful trader for many, many, many years had told me. He says, there's a lot of chatter out there in the world with CNBC and all these analysts and stuff like this, and the numbers, and they're crunching them left and right. We just had an inverted yield curve come out, and everybody's talking about recession. Listen, focus on your trade setup, whether it's long or short. Focus on it, because you know what, where there's where the fundamentals are, there's going to be charts that support it.
Yep.
And right now the charts don't support the short side. Okay. And yes, it's very difficult to get long right now. There's no doubt about it, especially on a Friday. You'd never do that. That's I don't say it's suicide, but it's pretty close to it. But we had opportunity about a week and a half ago that would have given you plenty of. Well, we had an IB go with. What day was that? I have to go back and look at it. Hang on a second. Let me go get that. But wasn't there go with on that was we broke out of the day. Okay, so on the 29th, which was Josh, go ahead and pull the 29th up. I want to show them this if you don't mind, or pull up a daily. Just pull up your daily TPO charts
for the NASDAQ.
Yeah, sorry. Okay, so what we see here is on the 25th, 26th, 27th, 28th, we had some back and forth here. And during that time frame, we had some overlapping POCs and volume areas. Okay. Bring it down a little bit and squish it down a little bit if you don't mind.
You want it wider? Or?
Yeah, no. The other one, you just had it there.
There you go.
Yeah, there you go. So what you'll see is we had, especially on the 25th, the 27th, and the 28th, they auctioned up and then they brought it right back down into the range again. And so we have three POCs that are within ticks of each other there. Okay. Once we move back above the highs of those previous days, you can see we had a balance area on the 29th. There was your clue right there that, okay, we're holding up now above these balance areas right there, okay? And once we held above those balance areas right there, if, there was a chance right there to say, okay, if you want to be long, there's an opportunity to get long with probably low risk looking at the highs of the most recent swing. And that gave you the opportunity. Now, unfortunately, the next day we gapped way up, and it kept going and going and going. But right up here, it's really difficult to keep buying. But at the same time, there's nothing that says, okay, we should start shorting this market right now. If some knucklehead on TV says, well, you should start shorting it, we're just so far out of whack, then you say, great, you go ahead and do that and let me know how that works. Okay. Right now, I'll implore you to watch your fund or your trades, your trade setups. And if it says go long, then, and it's defined risk, then that's what you should do. Okay.
Right.
But keep it simple.
That's right.
I mean, I'm not buying up here. I'll be the first to tell you. It's a really difficult trade up here. However, there was good opportunity down below there. And as was, oh man, when was that? That was, looking at mine here, hold on. Back on early March, we had the same situation. We had that big igniting day, that P day, if you go back to it right there, that day that formed the P on the 11th.
Mm-hmm.
Okay, that tells you anything that gives you opportunity to come back in. Yeah, right there. There's your clue. Okay, if you're not long on that, then you should either start to look long, or start to have a bias that direction, at least for a couple days. Right.
Yeah, the real challenge in a lot of these markets has been, so like if you know, when you have a day like this, you want to see, like, you know, here's a point of control on the prior day, you want to see them actually come and test that is a great way to be able to get long. And we just have not been doing that as we've been moving higher. Like there's just not a really good, let's come test a level. I mean, that was kind of what I was looking for today. I was like posting a fee. I wanted to see 75.61. I wanted to see him test it and then fail to get below that. I would have bought that all day long.
Yeah. The algorithms are pretty strong up here, guys. And that's what they are. There are algorithms. I mean, they're putting a lot of capital to work right now, and so you can't fight it.
Yeah.
I mean, they have more capital than we do. I'll be the first to admit that. And you know what our job is as traders is we're trying to work around them and find high probability opportunities, which there's loads of them out there. There really is. Mm-hmm. Josh, they ran your stop, and then looks like they're going to try now.
Are they? Sweet. No, who cares?
I was going to say
that's not trying. That's no. Not. I mean, we would have to, at this point, we'd have to break 92 with force. I mean, I would have to see like serious volume, but I don't.
Well, there's no sellers in here, I can tell you.
No sellers in here.
Yeah.
There's no sellers in here. The only one that's kind of interesting now is that crude is, I think, can they get those untested highs up there at 63? I think they're going to do it.
So hey, let's look at today's profile. Let's take a look at what it's looking like as right now. We don't know what the close is going to look like or how it's going to come in, but let's take a look at it right now.
Which one? Crude? Or
no, NASDAQ.
Yeah.
Okay, so what are we forming here right here? We had an open drive, and now we've been going sideways. We're really balancing. It's a beautiful balance area. I think we have personally, when I look at it, I think we have a little unfinished business to the upside right now in this profile. Yep. I'd like to see a couple ticks a little bit higher than that high. But at this point, you know, based on what we saw, one of two things are going to happen. Remember I think if you guys have been on here before, we know we either go high, we either trade higher, we trade lower, we trade sideways. Yep. Well, the last 2 weeks, we've had just a little bit of a pullback, not much of one, but they tried. And now we've gapped up here, and we're holding above both POCs of the last 2 days. Now, we've got a small P formation, which it suggests, and I'm gonna really say that word, suggests higher prices. Doesn't mean they are. Or the other scenario is we come back down and we start creating a range or a larger acceptance area. So we're going sideways, in other words. Okay, or we gap it up Monday morning and they go run it, which is also a possibility. Okay, so, but however, I don't see, I mean, unless something happens over the weekend, we open up, you know, well below everything. At this point, I see the two scenarios at this point. Now, we don't know what the close looks like, so they could dump it into the close and you never know what's going to happen. Or a tweet could come out by some crazy president and then, man, we just dump this thing. So at this point, it looks like coming into Monday, our bias initially on the close would be higher, or at least sideways to higher coming into Monday. Would you agree, Josh?
Yeah, I would agree higher with caution.
Yeah, very much caution. Yes.
And the reason for that, and you can see it a little more clearly. Let me go to another chart here. So Alex, this is kind of like looking at other charts, doing my homework. Um, so this is a 30-minute, couple key references here. Um, so this is the most traded price of the last week, right? Here's the most traded price of the last month. So anytime that the current price is above the last week, and that's also above the last month, I call that an extreme posture. So it's a place where if you look at the composite, you're running out of businesses, you're going higher, you're running out of participants. So that's saying if you're going to be long, you run out of company. And if I take a position, I always want to have others around me. I don't want to be the lone wolf sticking my head out there. So while it looks today like they haven't exhausted yet, we're in the area of price where we could see a seller easily step in and start pushing that late buyer. And that may come in the form of we get early, prices higher early into next week, and then they quickly come back. And I can tell you the place that I'd be looking for, especially if we close up here, place I'd be looking for them to test next week is going to be this 75-70 area, which is actually the spot where we broke out from non-farm payrolls. So that would be a price that if we come through that, I guarantee there's some stops below that. Some of these algo stops are below that, and that could set the stage and start working our way back down. So that'll be a key level for the bulls to defend next week. If they keep going higher without doing more business, then it only further exacerbates the problem. Mm-hmm. And in that situation, while I don't see a trigger to be short, I don't see really convincing reason to be short, I can't be long either per my plan.
Yeah.
So, if that doesn't present itself, or like today, I took a stab on the short, and was right about the time frame that if we were going to see it, we would see it, and we didn't see it. So I go, okay, well then I guess it's going to have to come next week, and that's okay. Like when selling comes, there's opportunities to join it. Even just looking at yesterday, okay, we actually saw some liquidation yesterday that we were able to take advantage of. And if I just expand the profile here,
we've had 2 great days this week of taking advantage of liquidation this week.
They pushed it. And you had time to make the decision too. They pushed it away from the open, and then they came right back through the open, right at a prior point of control. So that's moving away from an area of acceptance and not being able to sustain that, coming right back through that, and that often leads to pushing in the other direction. So that was a great short trade that actually closed the gap, cleaned up some inventory down here, and that's the kind of stuff that you got other people with you. Now it was just profit taking. It wasn't like a long-term turn at all.
And we also caught crude oil on that as well.
Mm-hmm.
Some liquidation in crude oil, which is good. And we were expecting that. We were looking for that because all the, everything, the criteria met it based on what Josh just explained to you about where we've come from, where we are, and what it looks like. And I will concur. Even though the bias would be to the upside, it is a caution move to the upside. If you intraday trade to the upside, that's totally acceptable. You just have to, you just got to know your stops are and keep them fairly tight. That I would say. I wouldn't fall in love with that trade. No way. Seen crazier things happen. So Nicholas had a great question.
Yeah, that's a great question. Most difficult environment to trade?
Well, I'll tell you mine. I'm good with one way or two way. I'm terrible with this low volume crap. I have no patience for low volume stuff. That's why I do not intraday trade the bonds or notes. I'll swing trade them all day long. I will not intraday. They just take way too long to hit their targets, and it's just like, okay, I can't do this. High volume, I'm okay with. And I'd rather say high volatility more than high volume. High volume is great because I mean, if you're trading any size, you can get filled easily, but high volatility scares people because you can get into a trade and see yourself 20 points on the NASDAQ down quickly.
Hmm.
And you just have to know how to do that. And the way you do that, and I'll give you how to do it, is if you're trading two contracts, let's say, and you get into a specific thing where we start to see our ranges start to increase dramatically because we're seeing a lot of volatility, specifically to the downside, because that's usually when it steps in. You're going to have to reduce your contracts and double your stops. Okay, so what's that look like? So if you see an opportunity in your stop, it shows that the stop should be 5 points, and usually typically trade two contracts. You may want to reduce your contracts down to one contract and go ahead and double that stop because of the volatility and the range of that, because if not, you're just going to get hacked all the time, and you're just going to lose money because you're not in the right direction. It's because you just don't have enough width on those stops on that deal. And then if you can't get the risk reward down, then by all means do not get into that thing. Does that make sense, or did I just ramble?
No, that makes total sense. Yeah,
Okay.
that's actually one of the beautiful, and in fact, we did a session with Tom and Corby a while back,
Yeah.
where we were talking about different volatility cycles and how we adjust to those. So what's awesome about the profile is it's volatility agnostic. So, and volatility best expressed in terms of expected ranges, right? Like how wide is a market going to be? The profile structures and all of that are consistent, irrespective of what type of volatility cycle that you're in. The ranges change, and so then that's where sizing comes into play based on that. Which actually, one of the cool things that I'm looking forward here in May is the micro equity products coming out, because when you have a large volatility cycle where like a Nasdaq's moving 20, we had what earlier this year we had the Nasdaq moving like 40 points in a 5-minute period. That's $800 in one contract, right? If you're wrong, pretty big risk. So you're going to have products that are going to be a tenth that size that you can trade. It'll really slow things down, which I think is pretty exciting. But yeah, I mean it's, and then that's why I lean on the profile, because it's, again, it works in all volatility cycles. Now, what's difficult for me, especially in a lower interest, when I mean interest, like there's less participation in the auction as we're going higher, than where you do have more algorithmic driven trade. You get situations like today where there's an area of interest that I'm waiting for the auction to come to me. And if you remember at the top of the call, we talked about two things you can control in the markets. One is where are you active and how much do you risk at that price. And we did not we didn't get to we don't get pulled back to that price, so that means I get no trade. So I watched the trade go in the direction that I want it to go, but because it doesn't pull back, and that's indicative of a lower volume, lower interest cycle of the markets. We always correct those and get out of those. The challenge is not trying to force trades in those situations. So that meant that I didn't take I took very few trades this week, because I know that there's better times to trade, and a lot of the structure and stuff that we're creating that's really poor, like all of these gaps and week-long gaps and different stuff, we repair them, and I just got to wait for the conditions upon which we repair those to take advantage. Which meant like this week, we had that gap from on Wednesday, and saw that gap, and kind of had to wait till Thursday to take advantage of it. So I identified it, then is waiting, like a move back to 75.61. If we keep moving higher, at some point we're going to go to 75.61. That's an attractive target. I just don't know when, and I don't know where, or I don't know when it's going to come into play. And today, unless we could make another, really, and this is kind of where I have an alert at, is like see how like on every 30 minutes we're making a higher, even though we're making lower lows on 30 minutes, but we're not making, uh, we're not, this is what you call getting short at poor prices. So these little flushes are getting people short, and then they're not getting any follow through, and then a flush gets short and they're not getting any follow through, and a flush is getting short and they're not getting follow through. So this is just like death by 1,000 cuts. The shorts, right? So unless you could see us like make another lower low and then make another lower low, where people were getting short at better prices, there's nothing to do there, and so you're just stuck. I mean, you're right in the middle of balance. There's no trade to be taken. So I'm just kind of sitting there going, well, I'm just kind of waiting there, doing my thing. Oh, good. Crude got that overnight high. I
Yeah,
like
I see
that.
that. So Tony had a great question, and actually it goes along the lines of what we were just talking about this morning with triggers. Do we consider locations for trade entry? Well, we don't use locations for trade entry. We use locations to open our eyes and give us a heads up that something could be happening, and then we use a trigger as the entry on inside a location. And then, so what was the last trade good location? Well, we're currently in one, and that's with crude oil.
Yeah.
Right now we have a big zone on crude oil. We call them zones, right? They call them risk zones. And what's that mean? Well, all that means is simply this. We have an area that we've identified that if we get there, we need to pay attention to that area, and that could be a trigger to maybe the long side or the short side, depending on how it's all setting up on that deal. And just recently, and again, this is why we've been in crude short a couple times this last week, because we are in this zone. This zone's a pretty big zone for us. It's from 6180 on up into the 6320 area. It's a big zone. So what we do is we wait for triggers inside that zone to help us get short. Now it looks like they're pushing that zone to the upper boundaries of that zone right now. Now, if we get above that zone or close outside that zone on a daily basis, that's invalid at that point.
Yep.
So
So,
yeah.
so let's walk about let's walk through this as if because there's opportunity. What's the opportunity in my mind is there's divergence between price and value. Okay,
Yes.
so here's value, not only for today but for the last week. Price is diverging from that. Okay, so and then we're into this composite zone. It was an area of interest that I was looking to be to potentially. Well, I'm looking for the auction to hold it down. So we're into that zone now. I'm looking for the auction to pause around here. And this is, they often push into these levels and stuff like that. They may push above it, but what I'm interested to see is can they sustain above it? If they come back through that, like you're getting impulsive buying right here. Impulsive buying should lead to higher prices. Like this is the big volume, it's big delta. Like they're hitting the offer, right? So that should get follow through. If it does not, and it's right at the area that I was looking for sellers to step in. If it doesn't, then that's I could trigger into a short, and I got to target back to 62.55. Right. So then I'm using the trigger. So I reach the area of interest now. Now I'm looking for the behavior that could help me define the risk. I have the opportunity and I always start with the opportunity. Opportunity being two-phase. One, I got to an area of interest. Two, I got, I have a potential target even back to today, and now I'm just looking to see can we get any behavior, and I'm just waiting. I mean,
yeah,
either we trade back to the 62.94, which is the base of this entrance here. We'll see, but I got some time.
Yeah, and so the answer to your question is yes, we do. We had one on still have one on the bonds, which has been a very nice one to the upside. We're actually, the zone is a support zone for us. That was happening. We got a couple other ones, but yeah, we identify these zones. We do a video every week that we send out to the individuals in the channel, and we go through these zones, these risk zones that give longer term areas. It gives us opportunities, whether we're looking like in crude right now, that would have been considered like a reversal zone. But yeah, I think it's healthy to use that kind of stuff, because nobody should get tied down to one single number. I just, today's trade, it's impossible with the algorithmic activity and the volume that goes through there, saying, oh, I'm going to short 147 evens, right, in the bonds. That's why. I mean, I just don't know how you do that.
Right.
I think you always have to use an area, and then you have to, what Josh talked about earlier, is triggers. We have to use triggers on that.
Yeah.
So
yeah,
triggers are going to be your best thing. And the reason is because triggers, go ahead and, sorry, I got sidetracked. Triggers go ahead and identify your risk if you do it correctly.
Right.
Oh, was that helpful?
Yeah, not all prices are the same, so we look at certain prices to be active because we have some expectation of how the auction would behave at those prices. And then once we're there, then we can. Now, I mean, the only place where I do have like resting orders is like if it was a target area. So like say if I was long, and we actually talked about being long early this morning towards this target, this would be a place that I could have a resting target price at. But for entries, I don't just like put orders out at a certain price and say, well, if I get to that price, fill me. But we are in the zone. Let's see. A little impulsive there.
Sure, Tony. Okay, so is there any other questions? We're coming to the top of the hour, and I'm going to get out of here at the top of the hour because it's Friday, and Tesla chart. Tesla's got a chart.
That's funny.
Yeah, take a look at Tesla real quick. What about it, Nick? What do you want to know? Sorry, I got allergies. I keep fighting them. Is it Nick or Nicholas, by the way? I don't want to be disrespectful. So my nephew's, his name is Nicholas. We call him Nick. So
You still want to look at Tesla?
yeah.
Yeah, because that's that's been of interest this week, huh?
Yes.
Let me attach this chart and bring it over here because that I actually have in a different place.
And guys, while Josh is doing this, if we hit the top of the hour, I actually have to run because I have to make a quick phone call at the top of the hour. Appreciate you guys being around. Always love doing this. So it's sort of fun for Josh and I as well. Because I say sort of fun. It is fun because, you can't get enough of the basics out there. You just can't. Okay. And, talking about them openly is a great way of doing it. And so we appreciate all the feedback, appreciate all the questions. There's not one dumb question out there. They're all great questions. I always say Josh and I are not gurus of any sort. We're pretty knowledgeable because we've made every mistake in the book. So, thanks for letting us share that with you, that knowledge. And again, if you have any questions, just ping us on that deal. Josh, I'm going to let you do that. I'm going to hop off here. Take care, guys. Have a great weekend, okay?
All right. So, obviously there's been some news around Tesla. I find it interesting that, they pushed lower. Where did they find some acceptance was around this point of control. So this 268.50 is a level that the auction should have paused and held. So it is kind of what I'm talking about behavior wise of, a level. So that, 268.50 would be an area that I would be watching in Tesla. They tried to push below it. They came back and they're getting acceptance and holding above that. So that's actually a level you could lean into to the long side. And then the question is, back to where? Last month's point of control is right around 275. They get above that, then there's another area back to 286. And I typically, when I look at equity stuff, I look at higher time frames. I don't look so much at the um, narrower time frames, but here's that 277 is a prior weekly point of control as well. And then there's some nodes, but those are kind of areas that I would look to be, of areas of interest, um, especially these composite longer term levels are the ones that I would look for some kind of trigger. So I could look for, hey, if I come back this way, I could look to be long this way. If I was already long, I might want to protect, if we get up here, I want to see them hold this level and would protect that. If they can hold that, then the next area is back up here. And if I wanted to be short, I might wait to see if they reflect off of that. Where would my target be? It could potentially be back this way. That's kind of the ways that we think about those types of behaviors. Is that kind of what you're thinking on an order at 255? See if crude can trap them here. It looks like they might be trapping. I like it. Hang on a second. Let's go back to our crude chart here real quick, because there is some. So this, got into the zone. Impulsive buying should have led to follow through, is not so far, and we're seeing sellers stepping in. Now, if they get back through 60 to 92, which was where the base was, there's probably some buy stops under here, and then that would basically cancel out this behavior. Now I've got an area that I could lean into to set up a potential trigger back towards that 56 area. Let's see if they break that. If anybody, I'll stick around for another 15 minutes. If anybody wants to stick around, also want to give everybody time to leave if they would like. Hang on one second. I need to just gonna check some positions here. Okay, cool. Because we may trigger into crude here in a bit. But if you need to run it, I get that too. So just a couple things for anybody who needs to head out. One, next week we're going to be talking about this in our community, our development community, is different ways that we use triggers. So we'll look at trade examples around that. Practice. Pick a type of trigger. So this is typically it's a price action orientation that you're using to focus on. Get a number of instances practicing entering the trade and setting stops according to that type of trigger. You can get examples of that and spend time with us doing that next week, and interact with us on Twitter or on Facebook. And if you ever have any additional questions, or you want to know if we're a good fit to help and so forth, you can give us a call or an email, and we'll try to be as responsive as possible. But that's it for this week. We'll be back next week with another Q&A session. So thanks for the questions. And for those of you who need to go, have a fantastic weekend. And those of you who want to stick around, see if we can get triggered into this crude trade. We'll stick around for another 15 minutes or so, because we've got close and crude coming in about 20 minutes. So if it's going to happen, it's going to happen quick. It's going to happen quickly. I'm just going to keep my eye. 96. If anybody has any last minute questions while we're waiting to see if this thing will trigger for us, then I can cover those too. Covered all of that. So Nick, what is it about 250 that is interesting to you in Tesla? Oh, monthly 20-year. Let me get over there. I definitely see a high volume area there. I think it's interesting. There was a monthly point of control right here at 261. You can see they pushed below that and came back. They've been trying. That's been an area that they've been defending. And where's the target? I mean, looking to be long at 250. Are you looking just to trade back up into the bulk of this stuff like 300? I mean, that's kind of how I would look at that as a first target, 340 as a second target, and then run for new highs. Okay, so here's a trigger in crude for me. So again, this is actually something I call structure cleanup trades. We got single prints right here, back to 6280. We've got the point of control down here. So there's poor structure to clean up. So I can defend this 6310 as my risk, and I'm looking for target 1 here, but target 2 back towards this area of volume, because you see there's just no volume back here at all. There's a little blip of volume right here at 6289, so we might pause there real quick. Gap needs to fill above 300. Okay, gotcha. Close trade, valid for. There's like there's like one setup that I look for on the close. Typically, there's got to be a situation like this, like where there's some impulsive. Where there's some impulsive and poor structure that's really close within range, and there was some impulsive activity that didn't get follow through. So like the fact that we didn't get follow through here, we're running out of time in the session. Unless we can get back above 63.10, but really unless we can make new highs, the magnet is going to be back towards this direction. So that's the type of situation that I would like. And even like the Nasdaq, I mean, this 23 area up here where you got disconnect between price and value, that there's opportunity for a rotation back, because if this person gets going this way and can't get any follow through to support that behavior, then they're going to get nervous. That doesn't mean that it has to return that way, because it could be some other time frame trader that just pushes it. Like here, I mean, you can see they're trying to, again, higher in crude, and they may close on the highs, which would say that I'm wrong. But really, I could lean against these sellers, which at this point, because we did not get below that 89, this could just be responsive profit taking before the reload for another push. So, getting stopped there. We'll see. This is a short stab here, and I'm really kind of forcing it just for you guys. How about that? Fridays are tough to trade. Really tough to trade. We try to be done by 1 p.m. Eastern because there's just not enough interest, especially in a product like this. I mean, let's look at where we are. We're at the high of the week on a Friday. Very likely that they could close it on the high, which then leads to higher prices next week, right? Much better chance to see a reversal on that kind of stuff if it wasn't a Friday. Nasdaq's just putting along still. ES just putting along. Let's see what the other indexes are doing. Russell has recovered. So everybody's on their highs except the Dow. The Dow is the one. So a little bit divergence there in the equity markets. Okay, we'll get stopped here and then that'll be it. But this is what we mean by keeping risk tight, right? I mean, if here's my risk window, here's my target. I always try to find, again, start with the opportunity first, but have the target much bigger than the risk window. Because that way, if I'm wrong, I mean, I can be wrong multiple times and still come out ahead. Yeah, you know what? There's a lot of wisdom. You talked about taking the week off just to, why not have your target high of the day at the excess? Why not have because it's my trade. Why have it at the high of the day at the excess? Oh, the stop? I mean, I could lean against that, sure. I'm just trying to keep it a little bit tighter. That's all. And part of that is from the risk reward. If I make it here, all right, so now I'm starting to get a 1-to-1 on my risk to reward, which means that I got to have a better than 50% win rate, or I could start losing money. I mean, I actually have to be like 60-70% win rate to actually make money. Is how that ends up having to go. Yeah, I want to applaud you. I mean, like, if when there's one directional markets like that, so being able to identify those and just go, you know what, I'm gonna stay on the sidelines. There's great wisdom there. Great wisdom. Great wisdom. Oh yeah. Oh, nice. See, now they're pushing lower again. So keeping the stop where it's at. And let's see if they can run these stops on these buyers here that wanted higher prices, and now they're getting rejected. I like that. Yeah, put yourself in timeout, right? It's effective. It is effective. 10. Come on, y'all. You got 15 minutes to get down there, at least to 80. So much fun. All right, gang. I'm gonna jump off here. You know where the trade is. The stop's in place. We know the target. So kind of how I'll trail this. Okay, if we start working towards into these singles, so here's the first here's a pullback push. So I'm defending this level. We would need to push lower, pull back, and then move lower again for me to move the stop and trail it. But I have an OCO down here, and then one on the stop, and then just kind of bracket it down as I'm going towards the target. Fair enough. Yeah, that's the word. And we'll see what that offers. Have a fantastic weekend. Look for the recording on the site and over the weekend, and we'll look to see some of you join us next week for a trial week. Or if you just have any, you're just not sure, like, is it the right time for me to do some work with you guys or not? Just shoot an email. We'll give you a fair shake. I mean, I don't like being forced into something I'm not ready for. So we just want you to have the information that you need to make the decision that you want to make, and we'll support you in that. It's all about you doing what you need to do to find the success that you want to find, right? So that's why we exist, is to support that. Have a great weekend, everybody, and hopefully it's getting to be more springtime where you live if you're in the northern hemisphere. Otherwise it's starting to get chilly. And we'll talk to you next week. All right, see ya.